Hi, everyone. Welcome back to the Amberdata Podcast. I'm Izzie Henderson, and I'm excited to be joined today by Chris Yin, who is the CEO and co-founder of Plume. Plume is a blockchain optimized for RWA and makes them more accessible and efficient in tokenizing assets. And I believe there are over 180 apps and protocols built on Plume already. Chris, thanks for joining us.
Thanks for having me. Appreciate it.
I think to start us off, I'd love to hear about your background and what led you to found Plume.
Sure. So yeah, a couple things. I mean, very simple. I used to be, I'm sort of at the mix of being a founder and being an investor for a long time. And so I was, my background, very simply put, I came out of school. I was doing a lot of enterprise software before. And so, started a company in expense management at the right time, right place. We were using a lot of machine learning to classify things. It got picked up. We got acquired within 6 months of doing that. I helped to run product at a company called Coupa Software after then. And then, kind of saw the whole thing, took it from, 50 people to 2,000, a small company. Then we took it public a couple years after that. And then right around then, I was kind of figuring out what to do next. And I was in a couple of different things. One, I started angel investing a lot. And two, a friend asked me to go help run a company called Rainforest. And that's where I kind of got sucked into crypto, right? Whereas a Rainforest is a distributed product, right? Meaning there's a community of 60,000 people around the world that are using the software. You push a button and they come test products for our customers, right? It's sort of like a distributed and on-demand QA team. And those people, all of them, right, are the kinds of people in Latin America, they're Eastern Europe, and these different places where the stablecoin is a big deal, inflation is a big deal. I remember the first thing we did was we put form in to ask them what they liked about the platform. And I said, this is great. We like working here. The problem is, like, you keep making me off-ramp to my native currency. It's no good. I'd rather take Bitcoin and ETH. And so I was like, oh, okay, got it. So I went back, we built some off-ramps, we got into all of that. And that was right around the time of DeFi summer. And so all these things kind of came together. I just got sucked into crypto and into the nonsense. Meanwhile, while I was doing this, I was doing, a couple of my angel investments started to do well. And so I got a call from a few venture firms. I went to go do venture to learn how to invest properly. Turns out it's the same thing. And so while I was doing that, I sort of was still doing a lot of crypto. And I've known Teddy and Eugene, my other two co-founders, for a while. We're kind of thinking about ideas in crypto. And really with this orientation on onboarding. And we kind of felt like it was about 2 years ago when we started jamming around and talking about different ideas. And we were thinking, look, most of crypto at that time, it felt very much like micro optimization of DeFi. We were just sort of trying to squeeze more dollars and more yield out of the same ball of cash, right? And the truth is, there's just only so much you can do with that, right? It's just novel ways to rob each other on chain versus trying to figure out how to actually do something new. And so, I had seen a bunch of deals in RWAs and I'd done a couple of angel investments there. Teddy, my co-founder, had seen a bunch deploying onto BNB chain at the time where he was working as well. And we were sort of drawn to the story on onboarding and using RWAs as a new means to doing that. And as we got into it, we realized, one, that the sort of obvious story is, yes, there's a story there, right? But it's not quite what everyone thought it was at the time. We realized that there's sort of a different way to cut it. And as we pulled the layer, pulled the thread, we sort of went from one angle to a completely different one, but still all within the same realm around onboarding and RWAs. We really started off doing a heavy institutional product and realized that the way to actually get to that was not by starting that. You had to start in a different place to get to that point. So anyway, it was classic idea maze type stuff, started the company. And now, like you said, we're at 180 protocols today who are building on us. We've got represents about $5 billion in assets. We've got community of 18 million wallets on chain, and so it's going, and we're picking up and really excited to get forward into mainnet soon and bring these things to the community.
I mean, that's amazing, and congrats on this journey. I mean, it's only been deployed for what is it, just this year, 2024?
A couple, maybe less. So it's a few months, but yes, that's right.
Incredible, truly incredible growth, and I think we are seeing that trend, and that people start on the institutional side and go, wait, I actually have to do something new. And then it slowly, gradually sort of meets in the middle, which we'll definitely talk about more. But I think what would be helpful for our audience is to tell us a little bit more about what is RWA, right? Why do institutions
100%.
and regular people, maybe not even just crypto people,
100%.
Why should everyone be perking their ears up at this?
Totally. Look, I think the story is very simple in the sense that, look, crypto assets enjoy a few properties that other things don't, right? That the things in the quote unquote real world don't, right? Which is they live on chain, they're composable, they're fractionalized, you can take it with you anywhere, right? And anyone who's been on chain knows the experience, right? Or especially real on chain, right? Which is you everything that you buy or swap into, you own. Every action is final. You have control over the whole thing, right? And you really sort of, versus the classic walled garden Web 2 approach, which is I go to Facebook, right? Or I go to Insta, or I go to Twitter, or whatever these things might be.
I give them my password. Yeah,
exactly, right? Versus in crypto, the sort of first, the core property is the wallet, right? It's your identity, it's your assets, it's your stuff that you can then connect and give context to these things, and then decide whether
Yeah.
you want to give it or not, right? So it's just sort of a different orientation, and because of that, you've seen this sort of open, permissionless innovation around DeFi and crypto, where we've really built this economy out of nowhere, where people can now buy, trade, lend, swap, right, in a very permissionless way, and you have this sort of protocols that sit there that just able to process tons of volume, do tons of transactions, and really
Right.
unlock a lot of things and growth for people, right? So that's the great thing, right? And when you look at TradFi world, right, or just anything in the real world, you realize that most of the things we do here are just mired with nonsense, right? Like the classic example is real estate, right? Like everyone always talks about that because when you buy a house, you're like, this is fucking ridiculous process,
Right.
And so you look at like real estate today, that process takes so long, and what you're doing ultimately is taking a piece of paper, right, some title that's owned by
Yeah.
somebody and giving it to somebody else, right?
Exactly.
That's what this is, and it's like a 15-step process. Everyone's getting paid along the way, right? No one actually wants
Yeah.
to move this faster. Everybody is lying to each other as well, and everyone's checking the
Right.
same information over and over and over, right? That's basically what this is. And so, if we can put this on chain, we can eliminate all of that nonsense and just make these processes much faster, right? And then instead of having to do a big bulk transaction for one house, you can do a tiny fraction of it, right? And so you can begin to apply that idea to everything, right? And the reason why it's good for those assets, it's because assets today, again, things like houses. Houses are illiquid, right? They're not the most movable asset, but there may be a lot of people around the world that want access to these things. You should be able to allow a more sort of like you should have more access to all kinds of different things, right? And
Right.
that's one piece, right? So it's a sort of like global nature, being able to move things around and have this access. Number two, I think on the other side, it's for the assets themselves. Like assets need more liquidity, right? And they need more price discovery, right? Things are really inefficient today, right? It's also the classic examples like sort of Uber and these types of things, where like, look, a few set of people who have access to those types of deals in the early days, right, get access, they're able to make a bunch of money and get in, when truthfully, like, look, you should have been able to have global access to those types of things, right? And people love to invest in these types of activities and types of
Yeah.
companies, whatever. So like there's a lot of that, and so that's what it is. Now on the crypto side, the reason why RW is interesting is because, look, again, it goes back to the onboarding story, right? People want to speculate and come into crypto and do things. The problem is, right, 99% of crypto, right, goes up and down by like 80% every day, and like up and down. It's like it's which is great
For
for me
this
and for
week, at
you.
least, yeah.
Exactly, right? Like
Sure, but the
a lot of people
volatility
like
is definitely
that,
a problem. Yeah.
but it's insane, right? Like that's not how more normal people can interact and understand things. And so being able to take and sort of merge these two ideas together, where you have real things that people can tanker and other, sort of anchor themselves to,
Yeah.
versus having to try and anchor yourselves to like Doge or something that's sort of esoteric and unknown, right?
Yeah.
And then being able to explore and get the benefits of those properties around that, and like a more normal assets, right? It really should be able to onboard a bunch of new people. So that's why the interesting thing is from both sides, and why there's sort of like a natural fit here, why people are excited about this.
Yeah, definitely. And then let's just dive in a little bit deeper to Plume. So just tell
Yep.
us more about what you guys are doing, and really what's different about what you're doing.
Totally. Look, Plume, we build an ecosystem, a chain, and network focused on this RWAs, and we're really focused. I would say, look, I think it's broader. It's about bringing the real world on chain. That's what we're trying to do, right? And then that means a multitude of many things. But what we're trying to do here is make it very easy to do two things. We build a bunch of software, right, that makes it easy to bring things on chain, no matter what
Right.
they are, whether they're physical things or digital things or whatever, right? And we can talk about that in a second. And second is create an environment and community where those things can actually thrive and maybe become useful, right? And so we really combine a few things. We build this ecosystem, right, in order to sort of bootstrap and kickstart this ecosystem around RWAs. And the ecosystem really is a couple of things. It's projects, right, which means you have different things you can do here. It's assets, so people can buy and trade and do whatever, right? It's capital, it's users, right, and then liquidity, right? And so it's about combining all of those things in a focused manner to bootstrap and kickstart an ecosystem around RWAs. And so that's what we're doing here at Plume. And like what the focus is. And it's the integration of all these things together that makes this work and makes it powerful.
Awesome. Okay, so let's dive in a bit to the institutional side of RWA. I
Totally.
think probably the easiest topic to start with, especially for our institutional audience, is stablecoins, right? An
Yep.
amazing example of RWA, and provides that anchor, I think, that you mentioned earlier, which is you have a
100%.
US dollar. It's something that you trust. It's something that you're very familiar with, that you transact with, and you can sort of peg things to that. I think, honestly, we could do a whole podcast on just stablecoins. But
100%.
as we start seeing, credit cards like Visa and MasterCard, we have companies like Stripe, and all these places are accepting stablecoins and payments, allowing anyone everywhere to hold the
Yep.
US dollar, transact with it as collateral. Do you see the
Yep.
potential for stablecoins to be that on-ramp to introduce more users to RWA?
100%. It already is, right? And so I think you're totally right. Which is everyone always asks, like, what's the asset that's going to bring people in, or how RWA is going to come into play? And the answer is like, it's like you said, it's not only already here, it's arguably the best product in crypto, right? The stablecoin is an RWA, right? And the reason why people don't think about it as an RWA though is because the stablecoin, like, it just feels like crypto, right? It's composable, it's liquid, right? You don't have to think about it as like quote unquote RWA, and that's how it should be, right? And that's our take, and you answer why we're different, right? Like we built our entire product around this idea, which is at the end of the day, it should be crypto, right? It shouldn't be this carbon copy of TradFi stuff just put into a different chain, right? Because otherwise you've lost the point, right? The whole point is to build this for a new environment, right? And make this work for an audience that's here, and there's a certain UX and a feel around it. That's what really matters. And so I totally agree that it is, and it already is, right? Like you follow this path of the stablecoin. The stablecoin is $180 billion in market cap today, right? And it grew in sort of, in my opinion, three distinct phases. Number one, it was a tool for crypto people. Right, in the sense that like it was a DeFi tool, right? You just wanted to have something to hold that wasn't just your synthetic stablecoin, which is long Bitcoin, holding Bitcoin and shorting it at the same time. Like that was what people used to do, right? Which is now called the basis trade, I guess, right? So like that's kind of what it was before. It grew off the back of that, so you had a lot of DeFi usage. Number two, then people realized, wow, okay, I can hold the US dollar this way, right? And so emerging markets all sort of holding the dollar this way and begin to transact and realizing, wow, this is a lot better than a currency that goes. That's I believe in Japan it's or no. In Nigeria, I was just talking to someone yesterday, right? Like the currency inflates 100% a year, right? And so like that's just obviously insane, right? And so being able to hold the US dollars is like a lot
difficult to manage any strategy around that kind of volatility.
Exactly, right. You can put it into a bank and get 20% return on it every year. But if you're inflating at 100% a year, what's the point? You're losing a tremendous amount of money every year still, right? And so being able to hold the US dollar ended up being a really attractive proposition, and that brought a lot of people in. And then from there, the institutions came in and realized, okay, there are people doing something with this, right? What can I do with it as well? Is there something to be done here? They realized cross-border payments, right? Remittance, all these types of things are really useful because you can settle a transaction instantly, right? And so it's the same path. I think the stablecoin is the defining product in RWAs for now, right? We think there's a lot more to come, but at least for now, it's going to continue to be the sort of pointy tip of the spear or whatever that really brings people in and continues to build use cases in and around it, because it's again like it's tied to the US dollar. It's stable, it's safe, right? There's a lot of demand for it, and more importantly, at the end of the day, for money has a network effect, right? And tokens have a network effect, right? And so you do need to have something that begins to really seep through everything in order to build that network effect, and then you can build and kickstart from there. So yes.
And I think it's something you said that we often forget is that so much of the world is shut out of the US stock market, of holding the US dollar. Slowly now with stablecoins, with crypto in general, that's not the case. And I think opening addressable market to previously less tech-focused areas like Africa, like South America, can be a major factor in increasing our on-chain asset.
100%.
How are you targeting and tapping into that potential?
Yeah, exactly. And I think look, for us, again, you mentioned why we're different again. Like our path and the way we think about it is entirely like the stablecoin, which is like you have to build for crypto first, right? And then it becomes an emerging market story, right? And then you can build from there, and then an institutional story, right? And so if we start down there, we've already done a great job, like sort of like aggregating the crypto native stuff. We have more to do there, of course, but that's kind of where we began. And right now we're beginning to talk about the emerging market stuff. So we're spending a lot of time with folks in Africa, with folks in Latin America, with folks in Eastern Europe, right? Folks in Asia, right? In the Middle East, right? With people that want US denominated assets, right? To go along with their doing there, right? So any place where there is a stablecoin presence, right? In a major way, where, in Latin America, many places you can use stablecoin at local stores already. You can forget just like, peer-to-peer stuff, right? When you interact with the business, like they're willing to take stablecoins now, right? So that type of area is where you want to kind of tap into it. So there's really a few things you can tap into payment networks there. Tap into different neobanks, tap into distribution points, right? Tap into places where you get and swap and turn things in on-off ramps. And so we're doing a lot of partner with folks like that, and using our relationships and network down there to sort of help add this as a tool to allow those folks to not only get access to stablecoin, right? But for a lot of things we're doing, we're bringing US denominated assets and US denominated things on chain where you can earn a very safe, steady yield on these assets, also in the US dollar, right? And so you can get a 10, 15, 20% APY paid out in cash and in stables, right, on a very regular basis, fully liquid, fully permissionless, like composable, all those things out there. And so, sure, you should, I would imagine for a lot of these folks, it's just like anything. You're accruing a big bag of stables because that's your, you want to have, that's your sort of like store of wealth, right? And in tandem, what you want to do with that is like, instead of it sitting there doing nothing, park it into, some yield bearing assets that are very safe and stable. Have your pick, go from safe stuff like treasuries all the way up to something less safe or whatever, but getting a high yield. And this we can really get a second stream of income coming to this thing, right? And so that's one area that we're really exploring and pushing on right now. We can see a ton of demand.
Yeah, and speaking of treasuries, I mean, treasury-backed RWA has been really making waves this year. I think this week UBS just announced that they're tokenizing investment funds on Ethereum. I mean, at Amberdata, we have an RWA dashboard where we're literally tracking treasury-backed RWA because of how much interest there is in it right now. What is the opportunity here, and how do you expect the demand for those assets to shift?
Totally. I mean, I think there are two ways to look at it. One is that it's peaked already, right? And it's going downhill. The second is that it's going to continue to go up, right? And we'll get into it in a second. But look, the demand is very strong because look, people realized there was a unique moment in time about 2 years ago when off-chain yields are better than on-chain yields for the first time ever, right? So you had a 5% treasury that printed better than 2% on off-chain compound. And it turns out it taught us two things. People wanted to keep money on chain. And two, when it got here, people realized, wow, real yields are okay, right? It's not a scam. It's actually a good thing, right? And what that led to is people realizing and understanding that they want real yields, and that became sort of like the floor was lifted in so many words, right? And that it took some time to propagate through and become a thing, right? The idea that you can have an instant commission on some liquid way to just get 5% on everything, right? Meant why would you not do that for everything? Right. And that's just sort of proliferate everything. And because you look at things like Circle and things like Tether today, right? Like they don't do it. There's no yield with those assets, right? And there's a huge amount of money sitting there. So people are trying to sort of complement those things. And so like you said, treasury-backed stablecoins are like the whole thing now, right? Even DAI, right? The original, like one of the original tokens, right? Is very heavily backed by treasuries as well. And so, I think the opportunity is big there. Now, the bear case would be, with the economy of the world, the way things are going, like we're going to get rate cuts soon, right? We're already stopping at least the rate hikes, right? And so the interest that we're getting on this thing has reached its peak, right? And it's going to go down now, right? And if it goes down, then it's going to be this. People are still looking for the yields, right? And so if that's the case, you're going to begin to diversify away from having most of your portfolio in these big to at least some risk on assets, because you're going to want to complement that, right? And so that would be the bear case for where it's going. Look, I'm positive on it. I think there's still so much demand for it in general, right? That a risk-free rate of return, right, is going to be attractive no matter what. But I think both can grow at the same time, right? One is an on-ramp into the other, right? And so I think both continue to grow.
Cool. And then I guess just, this whole year, 2024, like RWA has been everywhere. I think every conference I've been to, that's been the top takeaway, right? I think we've seen it as a trend, but I don't necessarily think I've seen it translate into institutional investment all the way, right?
100%.
I think the other example for me would be, not RWA, but the ETFs, where we had this massive Bitcoin ETF launch.
Yep.
Great. But the price went up because people were excited that that it was announced, not that it actually came out. And then the ETH ETF was, people were disappointed. People were not surprised, right?
Totally.
What gaps do we need to bridge here? And how do you foresee the TradFi side of RWA growing over the next year?
Totally. I think one is just simply a factor of time. That's the first thing, right? Like, everyone in crypto, like the minute we see things, we just like we forget to think. We just like zoom into it to assume it's going to happen.
It's not a mature market. We're like, oh my God, this has only been a thing for a few years. Yeah, totally.
Exactly, right? Like Larry Fink says tokenization. We're like, holy cow, like everything's going to get tokenized. Like it's just not the thing. That's just not what's not going to happen. Like it is moving, but it's going to take its time, right? And so now, what is it going to take, right? Like even if we look at the gold ETF, right? When the gold ETF came out, it took a whole year of just sideways action before it went up. Right. And then it was relentlessly up for the next 10 years, right? Which is what we're looking for. But it still took a whole year to propagate and digest. Even, especially with last year, you have global contact, you have global conflicts going on, right? You've got the, all kinds of stuff happening. It just makes it a very tricky environment to get into it. But we've already seen, since the election, the inflows have been really going up already, right? Absolutely. And so it's already starting to happen, right? So there's that. And it's also, so that's one thing. Now, for institutional adoption to really take effect, right? At the end of the day, right? I think the thing that everyone gets wrong about institutional stuff is we're very overly fixated on a cost-saving story with crypto for institutions, which it's natural, because if you think about crypto, a lot of the benefits for the institutional folks are things like, settlement time, right? Around auditability and security and all this kind of stuff, which is great. And it's all true, and it is a massive benefit, right? I'm not downplaying those things at all. I guess my perspective is, in the folks that we have talked to, right, across a bunch of the institutions, I think common sense will tell you the truth. It's like, at the end of the day, right, like, saving money is cool, but making money is what can actually change behaviors, right?
Totally.
Like economics
Much more
drive
technical
behaviors.
story. Yeah.
Exactly, right. And like, just like anything in the world, right? Like, when we transitioned from the on-prem world to the cloud world, right? In again, take the same set of people, the TradFi audience, the institutional folks. Most of them didn't even make it into the cloud, right? We're still doing on-prem stuff for most things there, right? So the idea that you're going to then put stuff into a public blockchain is just outlandish, right? Without having a real reason to, right? And that was the same story, right? You're racking servers today, just pay a subscription, and Amazon or whoever can rack the servers for
Yeah.
you, and it'll be much cheaper, right? Couldn't do that either, right? The cost saving story moves some people over. It's not a strong enough catalyst because nobody cares. We care about making money. It's very simple, right? And so if that's the case, the way to get them in here is show them new paths, new markets, new opportunities, right? The emerging market story is one of them, right? Accessing new people to sell them new products. Number two, that I think is interesting that we're powering a lot of our workflows on is how do we make net new products that are interesting, right? How do we make net new products that spin things up, right? Net new products that you could not build anywhere else, right? That allow different things. And so, again, the AMM is a good example, right? Or there are different purpose markets you can do, right? There are just many different types of products that couldn't be done before that now we can put together and manage on chain. And then through that, right, that will bring people in as well, because now you have a draw to pull people in. And it's sort of, in my opinion, it's sort of like any new technology shift, you have the same thing, right? So take the mobile phone as a simple example, right? Like the mobile phone, today you can do anything on here, right? For obvious reasons. So I can go to Bank of America, I can pay for my Xfinity bill on here, I can do whatever, right? There's that. Now, but that wasn't the first thing that happened on the phone, right? The thing that really got the phone going in the beginning was things that took advantage of the native architecture of the phone, right? Which is things like location, it's push notifications, right? It's simple usability, right? And so what are the applications that came out that drove that, right? It's Uber, it's Airbnb, right? Those are kind of the first like flagship like iPhone moment type things, right? Where you really, I push a button and things happen around me, right? Because you could take advantage of the phone. You couldn't do that on the web. And that's what drove people to this. And it really became a shining light in the story part. And of course, and then you could just carbon copy the New York Times on here, right? So now you can read but so like that's like how it goes. And so the crypto's the same way, right? Today, that thing that you can't do anywhere else is shitcoins and memes, which is fine, right?
100%. I mean, it really is.
Exactly, and it's fine. So I don't think it's. I'm not. I do. I love as much as an expert, and I have a big bag, a bunch of them too, right? But on the same time, like we need other things.
Way more growth that needs to happen, is happening, and like this is a great fun use case, but it's making room for a lot of things that I don't think we could have imagined 5 years ago.
That's exactly right, and those things are the things that drive the decisions to bring on chain.
Yeah. So then moving on to non-traditional assets, right? I want to talk about liquidity. I think, we've talked about all these trend waves, but one of the most revolutionary things is that we're changing how we view liquidity, who can participate in certain markets and with what, right? So one of the things RWA does is it can lower these investment thresholds, but the other really cool thing that you guys are doing that we're seeing spoken about much, much more is genuinely new types of assets with real value coming on chain. I'm talking about like luxury watches, wine. I've seen sneaker collections, right? What are the new things coming on chain, and who is this opening up the market for? Like, what are you guys doing with these assets?
Totally. There's a bunch of things that you can do. Like you said, to me, there's three major categories. One is just like collectibles, right? So all even like sneakers, Pokemon cards, Magic cards, sports cards, blah, 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 right? All that. Number two is alternative assets, things that sort of like become assets that you can hold, but are just not the classic things, right? So we have a lot of like green energy, or maybe it's like alternative real estate or whatever it might be, right? And third is going to be things like a classic financial instruments, so equities, bonds, treasuries, things like that, right? Those are the type of things we're bringing on chain. And what are people doing with that? I mean, look, it really is, in my opinion, two things. One, you're looking for sources of yield, right? In my opinion, like again, we have to map to the audience today, right? What are people here for on chain? It's really a few things. Number one is just yield farming, making money, right? Number two is just trading, which is another form of making money, of course, but it's just trading. And third is speculation, right? Those end up being like the big buckets of things. And so we find assets that fit with those parameters. And so if you look at the yield farming and earning category, right, it ends up being, look, these are safe, stable things, right? Like sort of the financial instruments are like, again, treasuries, T-bills, right? It's about yield farming, so making money. It's a stable way to earn income. On the same time, then you go to alternative assets, like, okay, look, this is great, but I want a higher yield, right? And I want people to have it somewhat safe still. And so that's the alternative asset story, which ends up being things you have a lot of like solar farms, you've got oil fields, right? And things of that nature, which are safe, stable, straightforward, and easy to use, right? But still have a higher rate of return. So that's number two. And then after that, I think you then go to the other side, which is like more speculative stuff, right? You then want to trade and go into new markets. And so again, like things like, like sneakers, right? Like, there's a whole culture around trading sneakers, right? Like 80% of sneakers are about to be resold, right? Especially for the, so like you really want to make sure that like, because there's a heavy speculator, like the new Travis has come out, like it's a whole thing, right? And like
Right. You don't want, I mean, you can't touch it, but you can watch it for
exactly.
10 years and
Yeah,
yeah.
exactly, right. And so there's that, and even sports cards in it, right? Like there's a
Hmm.
whole culture around card breaking and owning certain cards, right? And getting cards graded, and it's a whole thing, right? Same with
Right.
watches, right? So like all of these things have a similar feel, where at the end of the day, excuse me, you're trying to make the value appreciate over time, right? And you want to access these things, be able to do them in different ways and package them and use them alongside crypto native assets, right? And use them alongside other things, be able to rotate into yield bearing things that are stable producing income, right? But then also rotate into like higher risk things, but also have a much higher return, right? And so be able to just use these things in different ways is what you're doing. So we're really, in my opinion, taking this sort of ecosystem of assets and use cases and building a DeFi community and DeFi ecosystem around them. So we call it RWA5, but that's the whole story, right? It should feel just like DeFi and crypto, right? And you shouldn't even have to know, or even have
Yeah.
like you shouldn't have to have any different of an experience that have with crypto native stuff, right? And so that's kind of what we're building here, right? Again, going back to it, it's just like the stablecoin. The stablecoin, you don't think that there's US dollar behind the scenes, right? You just
Right.
know that it's crypto, and I know that it's there because of the way the company's set up, and I trust it. But at the end of the day, no one's checking to see if the reserve is there, right?
Mhm.
And it needs to be done in the same way. So we're building the infrastructure to make that easy. So when you're interacting with an RWA on chain, you know that if it's on Plume, right? You don't have to think about it or worry about it, right? And you can just do what you have to do with it, and you know that the experience is going to be right, and you're going to be able to do whatever you have to do. It's not like backed by something. It's not backed by nothing, or it's not it's in someone's garage somewhere. You're hoping it's that you can get later. No, it's like in a safe place, in a real custodian, either with a digital custodian or at Brinks, at a very trusted warehouse, or whatever it might be, right?
Yeah, so then how do you verify those physical assets?
Yeah,
Like,
totally. I mean, look,
are you outsourcing that or are you guys like actually verifying it yourselves?
the second piece, we do it through partnerships. So
Nice.
I don't run a bunch of warehouses, and I couldn't do it if I wanted to. But we have a bunch of these partnerships where they will take in the assets if it's physical assets, right? They'll make sure they store it, they'll make sure they verify it, and all those kinds of things, and we'll do a proof of reserve against on a real time basis. You know kind of what's happening, right? If someone goes and touches it, you know. So this way, at least it's backed by that.
Totally. And so then what are you most excited about? Or what's something that's been deployed on Plume that has like blown your mind?
There's a lot of random things. Some probably not like appropriate, but let's see. We've seen everything from like, there's one protocol that wants to make it easy to trade uranium on chain. So there's
Really? Oh
that.
my
It's always
God.
kind of a weird thing.
That's
There's,
crazy.
there's a lot of like minerals and stuff, of course. You have like jade
Interesting.
and diamonds and stuff like
I would
that.
have,
I
that's
think,
not what I would have expected, honestly. Super
yeah,
interesting.
exactly. One other one is one of I'll maybe go to more like on of course we have the classic stuff. One thing that people are doing is we have a very expensive like a violin coming on chain as well. With the
Wow.
Monet paintings. There's some of those as well. But maybe more like esoteric use case. We've went around like nightclubs. And so if you're going out, right,
Right.
and you can like buy and trade tables on this thing, and then of course then you have a layer on top, which you can speculate on like who's gonna, what types of what's gonna get consumed more of, which one's going to go faster, what the sort of capacity is like in a place, and so you can sort of like layer on, like in my opinion, that's how Plume is. It's like, and that's it's a pretty like pedestrian example, but like there's many ways. What you want to do is simply give people access to different assets in the real world on chain through a simple click of a button in multiple dimensions. At one
Right.
level, it's the underlying, right? Which is like if I wanted to buy a table at a club or whatever, simple example, right? You could buy it through this, right? Number two is then being able to say, okay, let's like ladder that up a little bit and say, now I'd like exposure to that evening in general, right? Maybe as or whatever, right? Which is
Hmm.
like, I may not want to buy a table at the club, but like I can say, look, like I actually think like maybe, I'll take like a share of the, I'll buy a little bit of the of like three different clubs, right? Just like a
Yeah.
share of the equity or something like this, and I'll be able to get a share of what happens that night, right? And I'll have some take of the
Wow.
revenue that night. It's another way. And the third way is say, okay, like it's a more synthetic way. We say, look, like I bet there's like I bet that like this table is gonna like rip, and we're gonna do a lot of tequila there, so I'll just bet on tequila and I'll go long on there, something like that, right? So it's the ability to like take out a position against multiple different things and have exposure across different things and mix and match them.
Definitely. I mean, to me, that's one of the most exciting things about this industry, where we're now starting to see that maturing into that tech stack where, you're not so crypto native, you're not so degen that, you need to be the one coding all this. You can literally go into a platform and like make money off of things that, you never ever would have been able to access. So, um,
Totally.
super interesting. Okay, so then looking forward into 2025. So Donald Trump is retaking presidential office in January. How do you
Yep.
anticipate having a new cabinet and SEC chair that is pro crypto affecting RWA markets and trends?
I think it's going to be incredible, and I think it's finally going to allow things to come through the right way, right? Like We
Totally.
saw last year with, I think it's two things. These things are always top down and bottoms up in the sense that, like, at the end of the day, regulation, these rules are meant to protect consumers. That's the whole point, right? And it's meant to
Right.
protect the end user. And so the end user behavior drives the rules at the end of the day, right? And so we're seeing that there's sort of enough bottoms up demand, and crypto is enough of a single issue type thing for many people that it's
Yeah.
sort of, unable to stop, right? So that's why last year Gensler was forced to issue the ETFs for BTC, right? Despite like clearly not wanting to, right? Now, going forward, the benefit is like, I think Trump's going to continue us in that direction, right? And allow a bunch of things to happen. And so, like, really what we're looking for is not even like positive rulings or not. It's just clarity, right? There, today
Yes.
it's ruling by
100%.
enforcement. We have no idea what the hell we're supposed to do or not, right? And so that's the bad thing. Clarity would make it a big deal. Now, the thing I think we're going to get on top is not only clarity, right? We will have people lean in on top in a more aggressive way as well. Like we'll be able to do more, right? And they're going to, I think, be very pro crypto, right? Barron's pro crypto. We've seen World Liberty and a couple of these things come out, right? Good or bad, like it's a thing
I
at
know.
least, and they're engaging in it, So
Totally.
it's good for us.
Any engagement
And
is
it
good
just
right now. Yeah, totally.
exactly.
Yeah.
So I think that's all positive stuff, and it'll allow the institution to begin to come in a more free way. And like we've seen even in the last 2 days, our RBD folks and excuse me, are the folks that we're working with on the institutional side have already begun buzzing in a very aggressive way, right? I think they've been waiting and watching for the last year, preparing, researching, getting in the picture, right? And now that it's here, they're really going to push forward and go very aggressive at this thing. And so I think it's going to be a blow off top year.
Totally. And I also think stablecoin bill is going to be one of the first things that is
100%.
it actually I think has bipartisan support. I mean, not much bipartisan support, but I think it's going to be more in the middle there. Congress is definitely going to be very crypto friendly now. TradFi is going to enter. I think a lot of traditional banks are going to be exploring creating their own stable coins, or at least offering
100%.
services to clients. I think when we see companies like Stripe doing a lot of these things first, you got a Revolut, that you can do things on. Banks are really behind in that they're not offering stable coins and not giving their clients access to this thing that I think pretty much everyone is going to start demanding. How do you see a stablecoin bill really affecting how money's funneled into Plume?
Like you said, I think it's going to be interesting because then, like, we're going to go from basically one token, right? We have two today, right?
Yeah.
USDT and USDC,
I mean,
right?
right.
To a tremendous amount of these, right? We're seeing Mexican stable coins with pesos coming out. We see different countries going to offer their own CBDCs, and so, like you said, each country is going to have their own thing. You're going to have a huge proliferation of all these stable coins, right? And we'll see how it goes. I mean, I think it's a net positive, right? It creates a trickier landscape in the interim, just because right now we know this already today, right? Fragmentation, like more tokens is more fragmentation. That's all it is,
Yeah.
And that's the reality. But at the same time, we have the other side of it, which is more tokens, also more liquidity coming in, right? So sure, we're fragmenting, but we're also growing the pie in general. So I think as long as the growth is tied to real usage, right, and new people coming in, it'll all figure itself out to be good. Right, like today, at the end of the day, it's still small for crypto, right? And so bringing on huge new populations and huge new regions through these tokens and through these stables and be able to use them across crypto, it's going to be a good thing at all, right? I think it'll create a trickier interface for a while, right? As we're thinking about like where it can be used, you have to create liquidity pools to swap things around. You have to make sure that it's supported everywhere, and the composability store is a thing, right? So I think composability will be a real issue for a little bit, but right now let's get everything in here. We'll test the limits of it, and people will realize, okay, so we have to do a composability story around it and like wrap this thing up. And once that hits, then we'll be in a good place.
Totally. Okay, to close us out, if someone wants to capitalize in RWA or start building on Plume, where do they start? What do you recommend?
Totally. I mean, look, the easy thing, come to the website, right? Follow us on Twitter, join our Discord, right? There's all the stuff in there, right? We have a bunch of different programs aimed at builders or anyone who wants to get involved, right? Now, I would say this, people think RWA building, like being a builder in RWA is quote unquote, is an activity that's usually relegated to people who have an asset, right? I own a huge apartment building, or I own a bunch of cars, or I own a bunch of cars. That's a problem, right? Because that's just not what most things are, right? We've built our platform and our product in a way that makes it easy for anybody to get involved in building an RWAs, right? All you need to know is understand the market, right? We source the assets, we'll work with protocols to figure this out, we'll bring them on chain, we'll make it easy to use as an end user, but also too, if you want to build things, either creating new baskets of assets, creating new synthetics around this thing, be able to combine about this in a different way. Like we want to make it easy for people to create markets and to build things on chain, right? To be able to use it in different ways. And so, again, we'll make it easy for anyone to come in there and build. And so just come to the docs, take a look. We have a couple programs geared around this. We have things called our Take Flight program, right? Which makes it easy to come in and use a bunch of the services that we partner with. So anything that you want to do around building stuff is going to be cheaper by just coming to Plume. We have partnerships with all of them. We connect with them and we'll get you a deal. Number two is the Aviation Academy, which is our sort of a like incubation program where we can take you through, we'll help you through this thing and like show you and really get you distributed distribution and growth. And then lastly is, we also have an ecosystem fund and those types of things. And so we could definitely, help connect you to capital and bring money over as well.
Awesome. Chris, thank you so much for joining us. This has been super interesting. And everyone should check out all of those resources he just mentioned. Thank you.
Totally. Thanks for taking the time. Appreciate it. Thanks for having me.